In this video, we're going to take advantage of the decline of Tesla here soon. So you can see um, it's jumped up a lot here in the past few weeks. So we're going to take advantage of what's about to happen because it's about to come down. And I can tell for a few different reasons. For one, it's above its standard deviation line here. So that doesn't guarantee that it won't keep going up. But odds are whenever something leaves the standard deviation line, it tends to return back into those lines. On top of that, the RSI has curled down a little bit. So anytime that happens, let's see if I can find an example here. Like right here, you can see it came down and you can see the stock came down with it. So that is beginning as well. And it's also in its overbought territory, and that's above this blue line. So I'm going to take advantage of it before it actually does start to come down. So what I'm going to do is sell a call spread, and then you would sell a call spread when implied volatility or IV rank is high. So anytime IV rank is over 50, I consider it high. You can see right there, it's at 55. So if somebody who may not know may just buy puts, and that's okay, but you're not taking in the fact that IV implied volatility can hurt you, and you can actually lose money that way. So I'm going to sell a call spread, and I'm not going to go too deep in what all that means in this video. But just know it's a bearish trade, and I'll show you in the analyzer. So here is what I would receive. I would receive between a $570 and a $705 credit. That means they're giving me the money first. So if I just pick a number in between here and I analyze it, you can see here, and the blue number is what I would be investing into it. So it'd be possible loss of $4,150, possible profit of $3,350. I just needed to come down and stay below 1,168, and that's that white number right there, by that expiration date. So the more it comes down, the more I make. So I'm going to get 5 of these, and that's how I came up with that number. I'm going to get 5 of these and see how much that is. So investment of $4,150, possible max profit of $3,350. I just needed to stay below $1,176 for a break even. Let's see if that can go through. And if that doesn't go through, I have to adjust the amount of credit I receive. Okay. So it went through. Let's see. So here we are. So the initial is 4,100. The possible max profit is $3,400 as long as it keeps coming down here. So I got 5 of them. You can see that there for December expiration date. So we will take advantage of that, what's about to happen there. And I'll check back in a few weeks to see what's going on with that. But you can see the chart here. Take a mental note of that, and we'll check back in a few weeks to see what's going on. So I purposely held this until the day before expiration just to capitalize on as much money as possible. And I normally don't do that, but I just did it for this video. But you can see in the previous video, I talked about it coming back into the standard deviation lines, and that's exactly what it did. It worked its way back down. So I bought it on November 2nd, which is this date right here. And it worked its way back down just like we thought it would. So now it's on the opposite end of that standard deviation line. And because of that, I'm now up 33.85. And if I go to my analyzer, it worked its way all the way back down. And now it's trading right there at 9.26. So you can see my profits right there in the purple. So of the 3,400 that I could possibly make, I made $3,384 off this trade. And it was pretty simple just looking at your indicators. And if you use your indicators consistently, it starts to work out for you. So I will go ahead and close this out and collect that close to $4,000 and move it to a different account in my paper trading account.